All right. Good morning, everybody. TGIF, huh? Today is OpEx, so we'll see some shenanigans when it comes to looking at the options. You'll sometimes see a market maker move just because of the activity that we're seeing in the options, but don't be fooled by that one. It's just a function of the options expiring. Japan down 1.25, then the Dow. Europe up a quarter, and right underneath that, you got the NASDAQ small caps, S&P basically flat. Hong Kong, after some wild moves, sitting at zero. There was a report that came out this morning out of South China News. Got to kind of take it with a grain of salt because it hasn't been proven yet, and they are notorious for overstating things. If we want to try to be polite about it, just straight up lying. If we want to use a different language, they said that they've solved the GAN chip defect puzzle. We'll see. They haven't proven that they can, and the way it was announced isn't normal, right? Normally would have been run through universities and it would be fact checked and there'd be white papers, and it's very likely though that they have made improvements, and they've been able to do that for a while, especially with the hoarding of the material. So I would expect as the morning wears on, if that argument starts to lean more in their direction, that maybe they did accomplish something and that they're ahead of the curve, we could see more of those China stocks get lit, like Baba, Baidu, big chip makers. We got PMI this morning, and then we've got various Fed members through the day. The big one, though, is going to be that news, that headline I was just showing, and PMI this morning. Of course, OpEx weighing on us. So we've got European Central Bank, Bank of Canada. It's just going to be all day long with stuff coming out, trickling through. I wouldn't be surprised either if we see some headlines out of the administration either. You want to get more comfortable with the idea of these Friday data dumps. So I'd be looking for that this afternoon too. We didn't have the AM edition on the founder's note, but the PM edition pointed out some really bullish signals above the 61-65 level on the SPX. If we can get above that, which happens to be the JP Morgan color, then they said it'd be like can't remember the word they used exactly, but basically like a trampoline shot higher. So we got the dollar firmly under 107, even with this snapback right now. If we were to mark the half, it would come up just a little short of that 107. That puts us in a good place. We need to keep it and then, digest this low, make another leg lower, get down around that 106 flat, digest through that, take it another step. It's just one step at a time, right? With the 10-year underneath 4.5, but it's so close to it that, we could cross back and forth through this. It'd have been better if we were approaching it from the other direction like we are in the Dixie moving up. So with this moving down, if we wanted to measure the snapback on that, it put us with a mid of around 4.53. Just keep your eye on 4.5. It's a nice line in the sand. We're there. We're just underneath it. We need to keep it and get lower than this. 4.2 is the goal at this point. Let's get through this low that we have. Just kind of continue to push lower. In the ES, we widened our range out yesterday. reciprocation that we had on the upside, we got on the downside. We're back inside the box. But if we were to just focus on the immediate range, then there's the box, kind of mark the half, call it 61.32 just for a good solid level. We're above that 61.40. So that puts 61.50 in sight. If we can get firmly above 61.50, we'll challenge this high from Wednesday, the 19th. Challenge that high and then make a run for it. The JGB 10-year, I had some shenanigans last night. Kind of got my attention. A bit of a breakdown. And if we run the ratio US 30 minus JP 30, you can see right about 7 o'clock, this really big drop. Now, the other two charts, they don't open until 9:30, so they're not reflecting this drop yet. But if I zoom out a little bit, you can see the impact. Just think about how yesterday opened in the ES or the NASDAQ, and then look at this waterfall here, kind of get an idea of what we could be dealing with, right? This was yesterday. See what this did, see what that did. Zero gamma, basically 6100. Volatility trigger above that 6120. We're range bound inside our own Globex, holding above the VWAP, sure, but we set a really big range yesterday and we weren't able to run back up to 6150, basically where we opened in the RTH. We didn't make it back there yesterday. That's like a liquidity gap that we would want to close. It's still looming over our head, but we set a high in the Globex and we haven't been able to, well, we actually just did it. We just got a new high finally. So we're challenging our own Globex high. Maybe we can get this breakout, try to get back up here and get this gap closed. Then we'll work on the high of the week. Just a process, right? One step at a time. Overnight volume, a lot like yesterday. We had 58 yesterday, 57 this morning. It's close enough. It's about the same. Nothing really stands out on the liquidity side as a threat or anything of interest. Just like yesterday, to hit either of the ADR lines, we're going to need an inside day breakout. We'll have to get completely outside of yesterday's range to hit one of these lines. We can see the market maker move, but as I mentioned, we won't know if that market maker move is there because we have economic events that they're hedging against, or if it's OpEx. We almost always seem to get that on OpEx anyways, so I would lean in that direction. Today's central pivot has a narrower channel than yesterday, which implies if we break out, we could grow legs and really run with it. But to break out, we would have to get all the way up to yesterday's high, so 61.60 basically. Break out above that and then keep it, or get all the way down to 6100, break below that and keep it. Either one of those are possible, but on a Friday, with everything else going on, we're going to need some kind of catalyst to get that going. It is a narrower channel though, which does imply, especially with the narrowness of it, that if we do break out, it can run. The line is basically right on the cog line, which gives it a little structural support. It's lower than yesterday's pivot. That's bearish, but we opened above it, and that's bullish. Those two kind of cancel each other out. It's not an MDP because we've already hit it, so we have no reason to believe that we would need to go down at this point, since we already did go down and we already did hit it. Still holding above the weekly floor pivot. We're not overbought or outstretched. It doesn't owe us any reversion back to the mean due to our distance. So the floor pivot for the week is pretty much irrelevant at this point. All things considered, we've got a really narrow distribution this week. Be almost a textbook D-shape distribution with the point of control really close to the center of the entire distribution, the lower edge of the value area. We are above it. It's a good line. 61.32 is just underneath that point of control. Now that we're above that, we need to keep it. Of course, we're talking about keeping it on the day. The week almost over. It'll just be a look back function after this. But it's interesting to note how it lined up with this area that we were focused on earlier in the week. The point of control was higher. Now it's more in line with this previous week's distribution through Thursday into Friday. So we're just compounding or doubling down on the structure that we're building out at this level. It's a lot to say for the idea that we broke below it so aggressively, and yet we were able to run back up, digest through it, and now we're challenging the upper edge of it. If it was going to function as a significant area of resistance, we broke that. It kind of gives a nod towards, this bullishness that they kind of were talking about in the Spot Gamma Founders Note last night, about how there is still a lot of bullish backdrop. Even if, we're not breaking out and getting new highs, and the indexes themselves really aren't showing us the way. Ten-day, 30-minute volume profile with TPO, both points of control are lined up now. So we got the volume at this level, and we got a significant amount of trades at this level, which brought the line up. But as we were talking about yesterday, this is a zone. That line won't act as support or resistance until we leave the zone, and then we come back to it. And these candles won't be challenged for at least another week and a half. So this point of control is not likely to move at any time soon unless we go to a new spot and then build out a lot of volume at that new spot, enough to challenge all of this. It does highlight how long we've been at this level, crossing back and forth through that zone. The longer we stay ranged like this, there's a couple of different points of view on it. One, it's healthy for a market to pause and digest. Two, there's always that old phrase, the wider the base, the higher in space, except we're already at the highs. So this isn't a base, it's a top. Still the same logic though, right? The wider you range, the wider in time that you go sideways, when the breakout comes, the farther the breakout can travel. From an optionality standpoint, now that we're going to be getting through OpEx, any of the hedging or liquidity buildup on either side of this range likely gets readjusted or significantly reduced because we're going to be out of it, right? We're running out of OpEx. We'll be in a new expiry next week. Really narrow distribution from last night implies we didn't get any work done. So the market has plenty of juice for a move on the intraday today. Not that it owes us a move. It's Friday going into the weekend. This market doesn't owe us anything. All it needs to do is just hold what it has on the week, right? Survive into the close without a significant sell-off. Markets would probably rejoice even just keeping that. Still, with this really narrow distribution from overnight, implying that they didn't get any work done, well, then they can come in and get their work done through the day today. It is worth noting the day is already half done. I know if you're newer to trading, you may hear that and say, what? I just woke up. Well, good morning. The rest of us have been up for a couple hours, but trading's been going on since 6 o'clock last night. So if we're past 6 o'clock this morning, then the day is more than half done. We get a look now at next week's range. It's not set in stone. It won't be locked into place until after the close today, but we can gauge the current week's range and compare it to next week's range. It's worth noting that next week is a full trading week, unlike this week. And these ranges are built on two pieces of information. One is volatility. If volatility rises or falls, then the range will be wider or more narrow. The other component is time. Since this week has less days in it than next week, the range should automatically be bigger because, well, there's an extra day in there. We can see right now it's a little wider, not by very much. If we compare the last full week that we had to the week that we're about to get, then we're looking at lower volatility next week compared to what we had last week. When it comes to these short weeks, they're always difficult to assess, try to gauge the level of volatility within it because that day is missing. If you compare 2 weeks that are similar, then you get a better idea of the level of volatility. Lower volatility, like we're looking at here, this more narrowed range, is not necessarily an indication that the volatility is dropping. Like if you're imagining the VIX every time I say volatility, this is not implying that the VIX is going down. And I don't even want to use the word VIX here. We're just talking volatility. The nerd word for movement is volatility. This narrower range is not implying that our movement will be less next week, per se. A narrower range can also imply that there's a big economic event next week, that the markets are looking at that and expecting to sit on their hands until they get that economic report, whatever it may be. We see this kind of activity before FOMC, for an example, which is a volatility suppressor. And yeah, I get it. The first time I heard someone say that FOMC was a volatility suppressor, I thought this person is crazy. Have you never seen FOMC when they make the announcement? We get the big move. That is not volatility suppressing. It's a big move. But the days leading up into FOMC, the markets will often go sideways and chop because nobody wants to get, big positioned right in front of FOMC. So it's volatility suppressing. When we see a narrow range like this going into a new week, a narrower range can imply The market is getting ready to sit on its hands, waiting for data. We're close enough to the 10-day now that it's likely we're going to get back into the chop and get pulled right back down into it. We're back in that gravity field. So we have some earlier examples of what that's going to look like. You can go back to the later part of January and the early part of February. We're going to be back in this if we don't get back above, say, 1.5 and start moving towards that 1%. Not 1.5, get back above half and move towards 1%. That's our distance from the 10-day moving average, right? So we got to get away from that 10-day or we're just going to get lulled right back into it. Looking at the 10-week, we're still more than 1% away from the 10-week. So we're far enough away that we won't just get drawn right back into it, but we're not going anywhere either. This is a good starting spot, but if we want to get that breakout and expansion, then we got to continue to distance ourselves from that 10-week. The problem is we're correcting in time. We're going sideways, and the more we go sideways, the closer that 10 can get to us. It would be better if we could just get a wash and then, move on and get going already. Once we're done with OpEx, who knows, right? That could be our wash. All right, well, China might be down, but the China ADRs are up. So the KWEB group, MCHI, yen, that's the yen ETF. Emerging markets, all of those are China-based. Then we've got Bitcoin, NASDAQ volatility, and that's it. The rest of these aren't up enough to meet our qualifications. Transportation, which is funny, I was just looking at the ratio on this transportation versus SPY. It's always good to see transports up, but we had some, serious volatility yesterday. We're holding above the year-to-date VWAP. That's a good start. We got to get through this January 27 high if we're going to continue to push up, though. Still, it's good to see transports moving in the right direction. There were some pretty big positions that had come through in the VIX that were highlighted by a couple of different places, headlines that were, popping out showing big positioning that was getting taken in the VIX, but we can still all see that big drop, 1.5%. I wouldn't read too much into this yet. Let it unfold a little bit through the morning. Healthcare, it says it's down, but it's just a little algo print. We're not really getting any flows there this morning. crude down a little bit. That should help. Not yet, but see it come around. So it should be a pretty decent day, right? We got to hold the line, wait on data, keep our eye on Fed and headlines, especially with that little bit of China news on that breakthrough. I don't think they're going to solve anything today, right? Because how do you prove a negative? If China doesn't have any results, then you can't really prove they're lying. It's just going to be a bunch of finger pointing and accusations, and probably not a lot of nothing come of it. But keep your eye on that headline, because who knows? Otherwise, we got our range set. We need to break out. It's very likely we won't get it. We'll just hold the line, go into the weekend, keeping this structure. And if you consider what we've done for the week, if we can close like this on the week, they'll see it as a win. That'll be a good way to end the week. That we stayed in the upper area of the previous week's big move up, and we didn't give too much back. We're right up inside that wick. That sets us up for a continuation next week, if we can follow through with it. If we do start to really break down today, it would be the low of yesterday that is the low of the week. Focus on last week's midpoint at that point. That would be 60.80. So below 6,100, you got 60.80. And below that, I think we have like the put wall or something. We got some option structure down there. Everybody be careful, be safe, watch the clock. See y'all next week.